One.
Good morning and welcome to our TIER Aggregate Compliance webinar. As we meet together virtually, let's acknowledge this place that we now call Alberta has been the home of the first peoples who have lived in this land for many generations and were shaped by it. We acknowledge the people of Treaty 4, Treaty 6, Treaty 7, Treaty 8, and Treaty 10, namely the Blackfoot Confederation, the Kinney, the Piikani, the Siksika, the Cree, the Dene, the Saulteaux, the Nakota Sioux, the Stoney Nakoda, and the Tsuut'ina Nation, as well as the Métis peoples of Alberta. We are grateful for all the people who have lived in and cared for these lands for generations, and both those who have gone before us and those who are with us today. My name is John Story-Bischoff, and you'll also be hearing today from Lucas, Christina, and Rihanna. Next slide, please. So our focus today will be on information and background to support the filing of 2022 compliance reports under TIER. So this includes some background on the aggregate program, the facilities that register and are covered by the program, an update on our 2021 compliance results and learnings, some sharing of how we reconcile Petronex volumes with what's reported to us, some discussion of our 2022 facility-specific benchmark setting, both benchmarks set by us and as well our review and response to benchmark applications from stakeholders. We have a time set aside, of course, for questions, especially questions that relate to uncertainties or areas that you want to understand better in terms of your 2022 compliance reporting. We'll then have a little bit of time set aside to talk about briefly about flaring as it relates to 2023 benchmarking and compliance filing. And we'll have questions for that portion too, although probably a shorter period. We're using Teams for webinars today, so please use the Q&A function to submit questions that you may have. If you need to, you may also pause and step away from the session and pick back up where you left off. If we don't get to some of the questions today, please feel free to submit them after the session by email to our aep.ghg email box. We intend to post the slides from today's session to our website. And as you'll hear from Dragan, he's got a cold today, so I'm going to deliver some of his slides on his behalf, but he'd like to say hello. Okay, so moving in.
Good morning.
Sorry, Dragan.
Good morning. Due to cold, I can only speak in a Darth Vader voice, so I will ask John to present my slides. Thank you.
Thank you, Dragan. So the TIER aggregate program, as many folks know, was introduced in the province with a number of objectives. So some of those objectives include maintaining provincial jurisdiction over regulating industrial emissions, of course, creating an incentive to reduce greenhouse gas emissions in the conventional oil and gas sector, as well as maintaining the provincial industry competitiveness relative to costs under the federal fuel charge. The aggregate facility program is voluntary for those conventional oil and gas sites that are under 100,000 tons, so it's a voluntary entry into the TIER program. Conventional oil and gas facilities regulated under TIER can benefit from and apply for exemption from the federal fuel charge for fuels that are used at their regulated facilities. And as of today, we have approximately 56,000 individual facilities have entered the program through about 250 aggregated facilities. Next slide. In terms of the elements of what comprises an aggregate. So the building block of the aggregate program is a conventional oil and gas facility, or the COG, as we sometimes call it. So a COG can be comprised of a single facility or two or more contiguous adjacent facilities that are operated in an integrated manner and have the same person responsible. An aggregate facility is a group of two or more conventional oil and gas facilities that's been designated as an aggregate upon application of the person responsible through approval by the director. Next slide. So a little bit more background or detail on this concept of integration as it applies to conventional oil and gas facilities. So the tier regulation considers an individual facility to include all its integrated parts or components. So multiple adjacent individual facilities that operate in an integrated manner and have the same person responsible or operator, in this case, should be grouped together as a single conventional oil and gas facility. So when we have a battery as part of a COG, it will be understood that all the wells linked to the battery are also part of that conventional oil and gas site, and therefore they don't need to be listed separately in terms of individual wells. Several batteries that are closely related physically can be grouped into a single COG while providing individual facility IDs for each of the batteries. So sites that aren't in physical proximity but connected through a pipeway could still be grouped under a single COG if they operate in an integrated manner. Again, multiple facilities can be grouped as part of a gas gathering system, a custom treating facility, or a tank terminal facility, as long as the individual IDs of those subcomponents are included. And then injection facilities can be grouped under a waste plant that's linked to the injection facility where that's practical. And a reminder, when you're registering a conventional oil and gas facility, that sites that are over 10,000 tons, conventional oil and gas facilities over 10,000 tons, need to supply a boundary file that shows the delimitation of the site. So this is a figure that shows a hypothetical aggregate where a number of the individual Petronix facilities that operate together have been grouped into COGs. So in this case, we've got a little bit over a dozen COGs that represent, I guess, many times that number of individual Petronix IDs. Next slide. So a little bit more about the general operation of the program. So these are for the most part reminders for most people, but the tier regulation, including the aggregate facility treatment, is based on the calendar year. So if a COG is part of an aggregate facility on the 1st of January of a year, then that conventional oil and gas facility continues to be part of the aggregate facility for the entirety of the year. So if a conventional oil and gas facility is added to an aggregate, during the year, then again the COG is part of the aggregate for the whole year back to January 1st. In cases where a conventional oil and gas facility has started to operate partway through the year, that inclusion for the whole year really has no practical impact, as there would be no fuel use or production in the first part of the year. To note, new for 2023, we have expanded the definition of a conventional oil and gas facility. So we now include a facility for supplying or transporting water in relation to an activity described in subclauses 1 through 6 of the regulation, which describe conventional oil and gas facilities. So basically, if you're a water supply or transportation facility that services other conventional oil and gas facilities, you're now considered a conventional oil and gas facility and you can request to have such sites added to your aggregate. So there's a number of circumstances in which facilities are automatically or mandatorily removed from a conventional oil and gas aggregate. So this can occur if a facility ceases to meet the definition of a conventional oil and gas facility. If a site has more than 100,000 tons of emissions in a year, in which case it will become a large emitter under tier. Similarly, and again new for 2023, if a site imports more than 10,000 tons of hydrogen in a year, it would also become a large emitter under tier. If the conventional oil and gas facility is decommissioned, or if the person responsible for the conventional oil and gas facility has changed, unless the same change has occurred for all the cogs in the aggregate, then that conventional oil and gas facility could no longer exist within that aggregate because it no longer is associated with the person responsible. The conventional oil and gas facility may also request to opt in to tier as an opt-in facility. In that case, it will also be removed from the aggregate. We also have under Section 25 a duty to notify if any of these circumstances above occur. And then just as a reminder, the revocation of an aggregate facility may only be made effective on December 31st of the year. So again, like if a facility is being removed from an aggregate, that action will be effective at the end of the calendar year. Next slide. So a few examples of situations that are relatively common, I guess, in the conventional oil and gas aggregate space. So in a situation where a company A fully acquires the aggregated conventional oil and gas facilities from company B or merges with company B, the reporting duty under tier stays with company B for the year of the merger or acquisition. If company A purchases some of the aggregated conventional oil and gas facilities from company B, similarly, the facilities that are registered within company B's aggregate remain part of company B's aggregate for the full compliance year. So the reporting duty, like number 1, stays with company B. If company B is no longer in business, aggregated conventional oil and gas facilities are acquired by company A, then company A would take on the responsibility for reporting for those aggregate facilities for the compliance year in which that aggregate is acquired. So if company B no longer exists, then that duty would fall to company A. This is an item that we've clarified a little bit with our amendments to tier this year. And then if company B is no longer in business and the facilities, individual conventional oil and gas facilities, are acquired by multiple companies, facilities from company B's aggregate will be distributed to the identified aggregates of the companies that have taken them on, who would become responsible for the whole year compliance reporting for those facilities that they're added. In that case, the department would review and adjust the aggregate FSBs for those companies as needed in recognition of the new facilities that have become part of those aggregates through the acquisitions. Next slide. I'll summarize some important dates that are under the program, just for people's renewed awareness. Again, the regulation is the definitive reference for both for dates and for other matters discussed here. But just to summarize, so June 30th this year will be the compliance reporting date for 2022. So that's an important date. Mark it in your calendars. September 1st of this year will be the date to request a review of the aggregate facilities facility-specific benchmark for 2023. Also, September 1st would be the date to apply for either a benchmark unit or a benchmark for 2023 if you don't have such a benchmark. And then also September 1st would be the deadline to let us know if you're requesting a change in your benchmark reference years for the 2023 compliance period. November 15th is a bit of a new date under the amended regulation. So that would be the date to apply to add an existing facility for 2023. So we've moved this date up a couple of weeks. November 15th also becomes the deadline for creating a new aggregate facility for 2023. So we've basically enabled under the regulation this ability to create a new aggregate in the course of the calendar year. December 1st, I guess, remains the date to apply to remove a facility from an existing aggregate for the upcoming year for 2024, and also the date to request the revocation of the aggregate designation for an entire aggregate for 2024, should you desire to do so. So to again refresh a little bit. Total regulated emissions for an aggregate facility for the 2022 compliance reporting year basically include the stationary fuel combustion plus exported CO2 emissions from stationary fuel combustion. And the allowable emissions for aggregate facilities basically remains to be calculated as the facility-specific benchmark times the product for the year, plus any exported electricity from the aggregate at the high performance benchmark for electricity. So those are the free allowances that are available under the program. Next slide. And also to recall the relationship between your total regulated emissions and the allowable emissions. If you are able to bring your total regulated emissions below your allowable emissions, you can qualify for emissions performance credits. And as a reminder, if the equation goes the other way, if your total regulated emissions are greater than your allowable emissions, then you need to true up at compliance time. So emissions performance credits that are issued for 2020, 2021, and 2022 may be used within an 8-year period. Emissions performance credits issued for 2023 and later years will have a 5-year period before they expire. I believe I'll now pass things over to Christina to talk a little bit about the 2022 compliance filing this year.
Thank you, John. Just checking the sound. Thumbs up. You guys can hear all right?
Sounds good.
All right. So my name is Christina Winarski, the Director of the Aggregate Program under TIER. And the main objective of this webinar is to support consultants and operators on submitting the 2022 Aggregate Compliance Report at the end of June, which can be accepted as compliant with our regulations. So I've added a few reminders on this slide. Our small team of Dragan, Rihanna, and Lucas and myself are committed to ensuring that all of the 250 compliance reports meet the program requirements. So just for this first bullet here, I know it's top of mind on a lot of the operators as the emissions for flaring. They are not to be reported in the 2022 compliant report or compliance report due at the end of June this year. And the online 2022 compliance form has been updated with a $50 per ton price for obtaining one fund credit towards the true-up. So please ensure you are using the correct form in the submission, and as well as the latest 2022 confirmation of regulation list. And that's the COR is what you'll hear throughout the presentation, and that is the list of facilities for at the end of the year or your latest 2022 facility list that has been issued. And as well, ensure that the 2022 FSB or the facility specific benchmark letter that has been issued by the department is used in the 2022 compliance report. If there were no changes in the facility list in 2022, then you'll have to use the last issued 2021 COR list. And even there are a few aggregates who have not had any changes since enrolling in the program. And if that is the case, then your last list issued from the department was 2020, then that's the one you'll be using if there has been no changes to your population of your aggregate. Third-party verification is required on all compliance reports. And also please submit the fund credit purchase form 3 business days in advance of payment, and note the aggregate ID in the deposit memo to prevent back and forths with finance and the operators looking for owners of deposits that we have received. And ensure that a credit fund purchase form is submitted. There is an address on the compliance report in that tab, aep@revenue@gov.ab.ca. And again, reports are due June 30th, the latest date they can be submitted this year. And please ensure the payments are also submitted prior to the June 30th deadline. Discussions have been underway in terms of admin penalties, and we want to ensure that we don't have to go down that path. So please submit all payments and reports prior to June 30th to ensure that you're not flagged for further compliance enforcement through the department. Next slide, please. So here's the 2021 compliance update from the reports received. 91% are compliant to date. We have got about 25 more to go. The team's working fast and furious to try and get all reports accepted and issue the remaining FSBs so we can send them out. There'll be a batch of letters going out next week, and we really appreciate your patience in this regard. We had to issue 5 compliance orders to ensure reports and payments were received. Total regulated emissions for 2021 were 18.7 about, so over 18 megatons, up last year. It was about 18.6 last year for the 2020 reports. So credits required were about 1.57 megatons, and that's up from 1.28 megatons last year. EPCs requested were about over half a megaton, about 0.55 megatons. And again, that's up from 0.36 megatons last year. Offsets submitted this year were about 300,000 tons, and that's up from 110. EPCs submitted were about 29,000, and again, that's up from 10,000 last year. So the official stats are soon to be released for the 2021 tier reports on the published on the GOA government portal. So keep your eyes posted for that. It should be posted shortly. Next slide, please. So here are some of the common themes or issues in the 2021 report submissions. These were listed hopefully to prevent any revisions that will be required for the 2022 compliance submissions. So unfortunately, we ran across wrong facility lists were used in the compliance report. Emission of facilities from the 2021 COR. So usually divested assets, they were not removed from the aggregate, and so that led to some omissions in the volumes. Extra facilities were also not listed, or sorry, extra facilities listed in CORs that meant to have been added, but they were missed, and so we had some extra volumes reported. Incomplete facility volumes for all 12 months. So this was the most common gap in reporting. Please note, divestment does not mean it's an automatic exemption from reporting unless the facility has been removed from the aggregate. So the department does conduct a cleanout of facilities at year end when the operator in Petronex does not match the aggregate operator or the person responsible for the entire aggregate. However, if an operator has not been changed, the cleanout will not occur, and you are responsible to remove that facility. And so that was the biggest hurdle that we ran into reviewing reports this year. Inconsistent methods from 2020 benchmarking or compliance reports to the 2021 compliance report. So we need to ensure that the emission reductions are not artificially inflated. Incorrect facility-specific benchmark or product unit. So verifiers, please check and ask for the FSP letter prior to signing off on the compliance reports. One other thing we ran into was there's a section, tab E in the compliance report, and if that cell was left blank, we were unable to do the financial reconciliations, so it showed a variance and there was a back and forth in that regard. So please fill in the cell for number of fund credits in that E2 tab. Gaps in verification procedures. So verifiers, please pull your own Petronex volumes and confirm they are accurately reported, and for the entire calendar year. This takes a lot of resources going back and forth with operators to determine which facility volumes were incorrect. And we have a small team, so it was maxing out our resources. Inconsistency in reporting Petronex compressor station volumes. So the compliance report volumes does need to match the Petronex poll, and Lucas will get into that in a minute. And we've noticed that under the gas gathering systems, some have been under gas gathering systems for compressor station volumes, and some have been separate from the gathering system. So please ensure that, again, the reports volumes reported match the Petronex. And at this point, I'm going to turn you over to Lucas.
All right, thank you, Christina. Just checking the sound. Is that okay? Okay, sounds good. So Christina talked about reconciling Petronex volumes. I'll get into the details a little bit more. So basically, most of you, if you have worked on compliance reports, you know the magnitude of the Petronex volumes. They can be large data sets. What do we do in our group is we load up Python computer code, different pieces of them to check many parameters in the compliance reports. And that's how we identified or detected most of the issues that Christina summarized. Basically, the Python code, the main Python code that we have generates a workbook that summarizes many parameters that are checked or tracked for all the aggregates. For example, how does it look like if we compare the submitted FSV in the compliance report versus the actually the one that was actually issued by the department. We make sure that they are the same, and if not, we reach out to the stakeholders to try to figure out why. And most importantly, we do the Petronex volumes comparison. We pull the Petronex volumes from the Petronex website and from the public data sets and also the confidential ones. So with those that are submitted in the CR, if we identify mismatches, we'll have to figure out why. Most of the time, it could be two reasons. One is inconsistencies in how the stakeholders report their volumes in the compliance reports versus how they report into Petronex. The other one is Petronex data amendments made after the compliance report is done. We also track other parameters such as true up obligations to make sure that everything checks out, the math is right, and how many credits a facility may get if their allowable emissions is higher than their total regulated emissions. For PetroNex volume comparison, it is done at the total and PetroNex ID levels. By total, I mean the aggregate total, summing up all the PetroNex volumes within that aggregate. It is worth mentioning that the most of the data, the PetroNex data, are available on the PetroNex website. If you search for the Alberta Public Data Conventional Volumetric Data Download, we'll be able to find 12 workbooks for each year. So basically, 1 month, one data set per month that contains all the PetroNex IDs in one Excel workbook. And for the confidential data, you may need to work with your client to be able to access those, either get the data sent to you or have the proper authorization to access the data through PetroNex. So in terms of data set size for 2019 to 2021, I have seen 4.6, about 4.6 gigabytes of PetroNex data, so basically a little over 1 gigabyte per year, combining the Alberta public data and confidential data. Next slide, please. So here are some examples of PetroNex volume mismatches. So there are a few columns in this screenshot, and this is part of the workbook generated our code. In this case, it's about the production or benchmark unit volumes mismatches. If we see, for example, in column E, a facility should be in the aggregate AG something. That means this aggregate reported PetroNex IDs that should be in another aggregate. So we call these the extra facilities reported in their compliance reports. And then in other cases, people put invalid PetroNex IDs in column B. In this case, there's one that says oil and gas. So of course, it's not a valid PetroNex ID, and our code could not find this ID in any aggregate. So it says this facility should be in the aggregates NAN. And then there's no data for this oil and gas PetroNex ID, which is invalid ID. And then in other roads, they are not highlighted by the red color, but there are mismatches. Sometimes we see data for one PetroNex ID in PetroNex, but the compliance report reported 0 or did not report on that PetroNex ID. It could be that the compliance report missed some of the PetroNex IDs that they should have reported on, or it could be they reported the volumes under a different PetroNex ID. So once we see these mismatches, we often need to review manually and reach out to the stakeholders to figure out why, to reconcile. Sometimes it's easy to resolve the issues. In one case, we had a change of PetroNex IDs due to the AER rules when their well changes types. And after getting the new ID, we were able to pull the volumes, and the issue was resolved. So after all the issues are cleared, and the director signs off, and within issue acceptance letters and transfer the data for FSB setting. So for acceptance letter, we often send out a batch, like 100 or maybe 20 sometimes letters by our mailing Python code. So next slide, please. So this slide is about the FSB adjustment due to aggregate composition changes. I have some equations here, and the purpose, of course, is not to make it daunting, but once we get into the details and know the components of the equation, it's actually fairly easy. The most tricky part is the IR, or intensity ratio. Basically, the intensity ratio is determined by dividing the fuel use intensity using the reference year's volumes, for example, 2020 year's volumes for the 2022 population, or the aggregate composition or list of facilities by the fuel use intensity for the reference year for in this, as an example, the 2020 year. So the fuel use intensity is calculated by dividing the fuel volume by the production volume, and once we have the ratio, we can plug it back into the equation on the top, the FSB adjusted, which is the ratio for the year 1 times the TRE, or total regulated emissions, for year 1 plus the ratio for year 2 times the TRE for year 2 plus the ratio for year 3 times the TRE for year 3. And then we divide that by the total of the production volumes for all the 3 years that are available. So if a year is not available yet, like for 2023, the volumes are not available yet, of course, it will not be included in the calculation. So as more data become available, the year's data will be added into the FSB setting during the benchmark setting period of 3 years or 2 years if you have an application. And then, of course, we have the reduction target as well for 2022. It's still 10% reduction. So next slide, please. Some intensity ratio, the IR or just R based adjustment criteria, we put those calculated ratios into different buckets or ranges. This table shows the ratio ranges. So sometimes we also talk about percentage changes. So in the first row, it says 0.8 to 1.02. Basically, it's 2% change, within 2% change, up or down. So negative 2% to plus 2%. And then we don't adjust the PATCHNEX emissions. And then for another range, 1.02 to 1.10, basically 2% plus 2% to plus 10% change. We multiply the PATCHNEX portion of the TRE, total regulatory emissions, by the ratio, and we also do the same thing for the non-PATCHNEX portion of the emissions. If the ratio, due to the population change or aggregate composition list of facilities change, is greater than plus 10%, then we multiply the PATCHNEX emissions, the portion by the percentage change, the ratio 1.10 over 1.10. But for the non-PATCHNEX emission portion, we do not make the adjustment. So the TRE will be the PATCHNEX emissions multiplied by the ratio plus the non-PATCHNEX emissions as is. And then there's, of course, the negative changes or trending down changes, less than minus 2%, or in terms of the ratio is less than 0.98. We do the same similar treatment as the ratio treatment between 2% and 10%. So multiply both the PATCHNEX portion and non-PATCHNEX portion by the ratio. Next slide, please. So here are some. Here is an example FSB letter supporting workbook. I'm showing 2 tables. Some of you may have already received your FSB letters, and along with the FSB letter, which is a PDF file, there is an Excel workbook as well for those that are not the first year compliance for 2022. So if your first compliance year was before 2022, most likely you would have received the FSB letter along with something that look like this. There are 3 tables, and table 1 is the PATCHNEX volumes for different compliance years based on different confirmation of regulation list of facilities. As we know, the first compliance year could be 2020, but not before 2020. But the benchmark years is slightly different. So it can be 1 year before the first compliance year. So it starts with 2019. So in this table 1, the numbers are extracted using our Python code basically it's like a pivot table that summarizes the activity IDs and by year, and also based on a different facility list for different compliance years. So if an aggregate's first compliance year is 2020, then we use 2020's confirmation of regulation list of facilities issued to an aggregate, and try to get the data for that subset of facilities for 2019, and we get the fuel number and the production or disposition or receipt volumes as well. So I have underlined some of the numbers, and these numbers are transferred to table 2 that are used for calculating ratios. So I talked about the compliance year 2020, and then for compliance year 2021, we go to the 2021 column. So the 2021 column is the column for the production volume and the fuel volumes for the year of 2021. And then the first column, the first list, is for the confirmation of regulation list of facilities. So basically, we got all those numbers underlined in table 1 that was extracted using a piece of Python code from the PatchNext data, confidential and public data. We put them into table 2. We got the COR issued fuel and COR issued production accounting volumes for 2019, 2020, 2021, and then we get a ratio. So as we recall, the ratio or actually the fuel use intensity is calculated by dividing the fuel volume by the production accounting volume. So we get one ratio for the 2019 year, 2020 year, and 2021 year, and then we also get another set of ratios by casting the 2022 list of facilities back into the 2019 data set, 2020 PatchNext data set, and 2021 PatchNext data set. So we get 2 sets of ratios, and then, we get 2 sets of fuel use intensities, and we divide the ICAST, which is based on 2022 population or aggregate composition, this number 0.064 by the number above, and then we get a ratio. In this case, for 2019, it's below 2%, so we don't do adjustment for 2019. And for 2020, the ratio is 1.02, slightly over 2%, so we do the adjustment based on that table. And the same thing for 2021 as well. It's over 2%, but below 10%. So we do the adjustment accordingly. So next slide. So to select a benchmark unit, in the previous table, the example was based on production as the production accounting unit. We can, there are a couple options. So option 1 is the kind of standard or most common units that we use: production, processed, and fractionated. We call it production, and then disposition or receipts of specified energy products expressed in meter cubed oil equivalent volumes. And these volumes, of course, can be found in the PatchNext data sets. And then there's another option, option 2, which we have a workbook, our conventional oil and gas website that helps with the analysis. So it utilizes an alternative benchmark unit that's not mentioned above in option 1, derived from any other PatchNext activity categories using a single or multiple products. Multiple variable linear regression will be used in the latter case. So if you are interested in option 2, because you couldn't find a suitable unit using option 1, you can try out the workbook that's available online. So for option 1, if you don't submit a application for a benchmark application, the department selects a benchmark unit, especially for the ones that have 2022 as their first compliance year. We have a piece of Python code for doing this as well. Thanks for this slide. And then now this slide shows a little bit nitty-gritty of how we select or evaluate all the benchmark units available and it's for option 1. We use Pearson's correlation coefficient. The equation looks a little daunting if you are not familiar with this kind of statistics, but the life can be much easier if you choose to use some functions in Excel, like the COREL function. If you have 2 columns of data in Excel in a sheet, 1 column for fuel and then one column for a production accounting volume, for example, production, you can use Corel, just select those 2 columns, and Excel can give you the correlation coefficient R. For others, they are more comfortable with starting from scratch, and they can calculate the variances, basically the P minus P bar, calculate the average, and for production, calculate the average for CO2 emissions, and do the variances by themselves. So basically, different components that generate the final correlation coefficient. And if you are into computer programming, of course, you can use other similar correlation functions like the CORR function in Python and similarly in R as well. Next slide, please. Yeah, so I'm showing an example scatter plot of fuel against the production. This is a fairly good benchmark unit that has an R value or Pearson's correlation coefficient of 0.74. That means the fuel is strongly positively correlated with production. In other words, if you increase your production, your fuel use will increase accordingly, and close to linearly as well. So it's a good indicator of how much fuel you would use based on your production numbers. And in the benchmark standard, it is stated that the products and benchmark units for an aggregate facility must be representative of the aggregate facility's composition, configuration, and emission. And one of the reasons is that, as we know, you can only manage what you can measure. So if your performance metric is not great, for example, a very poor correlation is found between fuel and your benchmark unit, then you may experience very strong fluctuations or swings in payments or credits. In 1 year, you may get a bunch of credits, and in the next year, you are paying a lot of money for the aggregates to compliance true-up obligation. That is because maybe unlike this figure, the fuel and production are clustered and follow a linear trend. The fuel and production may be all over the place on the chart. So be careful with selecting your benchmark units, and because you don't want nasty surprises, and we do want to see how the fuel use intensity change. So it's important to have a representative benchmark unit. Next slide, please. Selecting benchmark years. By default, the default reference period, as I mentioned before, is slightly different than the compliance years. It starts with the year prior to being accepted into tier, and the first 2 years regulatory under tier. So if your first compliance year is 2022, then by default, the first benchmark year is 1 year prior. That's 2021. So you have a 3-year benchmark setting period, 2021, 2022, and 2023. So in case the first reference year or benchmark year cannot be the year before the first compliance year, one of the following 2 options should be the first reference year, either 2 years before the first compliance year. For example, if your first compliance year is 2021, and then you feel like in 2020, you didn't have normal operations due to COVID, and then you do have 2019 data available, you could use 2019 as your first benchmark year, or the first compliance year. So this happens more than the first split. So a lot of new facilities that did not have production data before the first compliance year, they could use the first compliance year as their first benchmark year. So in this case, we would send you a same year benchmark form. And to request for reference year changes other than default 3 years mentioned above, the aggregate facility reference years notification form must be submitted to the department on or before September 1st of the year to which the benchmark is to apply. So there is a lot more details that would help you understand what benchmark reference years are available for each compliance year in the table 4 of the benchmark standard, or the standard for developing benchmarks version 2.2, which is available on our conventional oil and gas website. Next slide, please. And with that, I'll turn it over to Rihanna.
Hello, everybody. So I just test my voice. It's okay? Yeah. So Lucas talked about 2022 facility-specific benchmark for like a default benchmark. Here I will talk about benchmark applications submitted by facilities. In 2022, we received 34 notifications for rebenchmarking or benchmark application. So 5 from the new aggregates and 29 existing aggregates applied for rebenchmarking. So the rebenchmarking for the existing facilities may be caused by population changes or benchmark year changes or product unit changes, like Patronex data updates of the submission of previous compliance reports or benchmark applications. So like some facilities may exclude their fields in the previous compliance reports or benchmarks because that fields are under federal field charges. So they want to include these fields in their benchmark applications. So it may be caused by a combination of any of the above changes. So next slide, please. So issues found in 2022 benchmark applications, the common issue Christina mentioned for 2021 compliance reports are also found in 2022 benchmark applications. So the first is the wrong facility list. We found some missing or additional facilities in the COG list, or the total wrong COG list were used. We also found some inconsistencies for the fields between the submit fields with the Patronex data. So also some inconsistent methods used between benchmark years for a COG. So we require the same first methodologies used for a COG. We also found some low correlation analysis for the submitted product unit. If we found the submitted product unit is not didn't have good correlation, so we normally require the facility to do the analysis for other products. If all these products all have poor correlation, we probably will assign a provisional product unit for 2022, but we really encourage and recommend the facilities to do the correlation analysis in the following years. Next slide, please. The benchmark applications adjustment. So ideally, if the facility used the 2022 COR facility list to cast back their fields and production to the benchmark years. So, and it was approved by our review. So we will assign facility benchmark. So, but we have to do some adjustment for 2022 facility benchmark application because of the following reasons. So, yeah, so if the new list 2022 COR list was used under the submission, but the 2022 COR list was updated after the submission. So an adjustment might apply based on the population change in the 2 versions of COR. So if a benchmark application uses 2022 COR list, but another benchmark year, the facility prefer to use the previous approved compliance reports. So the adjustment might apply for the previous COR report reported data. So if the COR list for the corresponding benchmark years were used, adjustment might apply for each benchmark year. So yeah, so the benchmark adjustment procedures and approach were same with as Lucas present in the previous slides. So we really recommend the operators to use the last version of a COR list for re-benchmarking applications to prevent potential adjustments. So the facilities submit their own facilities specific benchmark applications. They want to get a more accurate FSB, but if you didn't use the latest COR list, we have to adjust your application and put another layer of uncertainty for your FSB. So next slide, please. So for the benchmark application methods, normally like we, the more conservative method should be used for benchmark application. That means the methods leading to a lower benchmark compared to the compliance report. So we suggest to the facility determine the appropriate quantification methods by predicting or planning the methods used for future compliance reports in order to avoid benchmarking. We see some facilities change their method from emission factor to gas analysis. So this cause a benchmarking because if the gas analysis is used for your compliance years, for benchmark development, you need to use the same gas analysis method or use a conservative emission factor for sales gas in table 50-2. So also another rule is to use the consistent method between the compliance report and the benchmark for the rich gas emission factor. So for the facilities use the technology-based CH4 and N2O emission factors in table 15-6. So yeah, you only can choose like a different technology-based emission factor unless you really have improved the technology for the COG. So yeah, so that's all for me. We will go to question and section. Thank you.
Thanks, Rihanna. We've been receiving some questions as we go here, not at a alarming rate, but if people have additional questions that they'd like to submit for us to respond to, we'll take a few minutes now to do that. We've got one in the hopper here. I'll just put it through and read it. So the adjustment on non-Petronex fuel for I guess the ratios of 1.1 and ratios less than 0.98 doesn't seem consistent with the spreadsheet received from AEP during regarding adjusting the FSB. So I believe the slide 20 embodies the intent. So if there is a difference there, I guess we'd maybe ask for you to follow up with us after the session for us to have a closer look. So you can go ahead and email our aep.ghg mailbox. So here's another question. Hang on. So question is, our aggregate submission for 2022 was rejected. How do we add new facilities for reporting for 2022? So you may add new facilities for 2023 at this point. Our deadline for adding facilities for 2022 has passed. Typically, we would reject those applications, I guess, only in the case where the applicant wasn't the person responsible for the facility. So, I guess feel free to contact us if you think that wasn't the case. But again, if you would like to add facilities for 2023, that's still available. We have a couple questions on flaring here, which we'll kind of get into in the next section. So we'll hold those for now. So if company A has a battery in their aggregate, but some wells that flow to that battery are owned by another company, should company A still be responsible for the entirety of the fuel at that battery? So generally speaking, yes, we're basically considering the battery and all the attached wells to be, if you will, kind of an atomic unit or a non-separable unit under tier. So we would look for company A to be reporting on the entirety of the battery, I guess, as the operator of record for the battery. So another question, what is the process of grouping facilities into a COG that are already part of an aggregate? So I think that would probably be easiest done at the calendar year end. So the approach would likely be to, I guess, remove and re-add those facilities with the appropriate COG labeling, so that you'd have a common name that exists across all of the individual Petronex facilities that comprise a common COG. If you wanted to reach out to the department, feel free to get more instruction in terms of that process, but likely it's easiest done at the end of calendar year. We have a question here, which I think relates to the compressor issue that Christina was mentioning earlier. So fuel volumes for ABCS codes may be reported in Petronex under from-to facility node ID column volumetric report, but the main facility Petronex ID may be ABGS since ABCS is not a main reporting ID. Where the fuel should be reported in that case, ABCS facility or ABGS facility. So the impact of that question is minor, except for the case where those two sites are in separate aggregates or distinct aggregates. Like in general, we would look to have the fuel reporting as closely as possible report the physical emissions from the various sites. So like I believe our preference would be to have, where possible, the fuel allocated to the ABCS site or the compressor where the fuel was actually actually consumed. Another question here, are we required to report non-operated emissions? So under tier, essentially there's a physical scope to each conventional oil and gas facility that you have registered as part of your aggregate. And so if you've registered that facility as part of your aggregate, then you're essentially taking on reporting obligations for the emissions that occur physically at that site. And it's also that essentially kind of physical boundary of that site that forms the eligible location where you can apply your federal fuel charge exemption. So once that site is registered, there isn't a distinction in terms of operation related to the emissions. I guess I would highlight we do have clauses in the tier regulation that basically don't require emissions to be reported where the fuel has already had the federal fuel charge paid on it during a time when the exemption certificate was eligible. So in that case, for example, if you have contractors coming on to the site to do work and they've already paid the federal fuel charge on the fuel that they're using while they're on your site, those emissions are explicitly excluded under tier from a reporting requirement. If a facility is joint venture owned, how should we proceed with reporting? So again, the reporting obligation falls to the operator of record for the aggregate, and it's that operator of record who's the person responsible under tier for reporting purposes. Mindful of time, I think we'll move on to the next section of slides, which I believe is Rihanna again, and we'll have then another Q&A session that'll take us to the end of our scheduled time. Thank you.
Hello, everybody. Welcome back to the presentation. So in this section, we will include 2023 benchmarks for aggregator facilities. And we also will talking about titering rates for flaring and 2 draft flaring measures we proposed. So next slide, please. So as you see, like this slide shows 2 different FSB equation. So the above one is for benchmark before 2022, from 2023 and onward. So we will include the flare emissions and the flaring reduction target in the benchmark. So next slide, please. So normally the reduction target consists of basic target and annual tightening rate for a year. SFC and exported CO2 reduction target was set at 10% basic target rate in 2022, tightening at 2% annually. Starting from 2023, but for flaring a little bit different. Flaring reduction target was set at 10% basic target rate in 2023 and tightening at 2% annually, start from 2024. As you see in the table, in 2022, SFC and exported CO2 has 10% reduction target, but flaring was not included in 2022 FSP development and will not include in 2022 compliance report either. But from 2023, SFC will reduction target will tend to 12%. The flaring start to be included in the FSP development and compliance report and 10% reduction rate. So for the new aggregates are subject to the reduction rate for the compliance year immediately. So no transition period as large emitter are opt-in facilities. So next slide, please. So yeah, we developed two methods for flaring emissions. So here is this figure illustrates the complicated flaring stack. So as you see in the middle, your flare stack maybe have continuous pellet gas with known composition. So on the left side, you see like your flaring may have routine flaring, continuous routine flaring, for example, from well gas with consistent composition, and also maybe like your flaring stack have intermittent routine flaring from your tank venting during working station, and also they can be from like the tank unloading or turnovers of cleanups. For this is the intermittent routine flaring. On the right side, you can see maybe your flaring streams or non-routine flaring. For example, from gas well liquids unloading or from some emergent blowdown. So we will develop the flaring quantification methodology. We try to provide flexibility for all different scenario of flaring. So it's possible any combination of flaring streams in this slide be possible center to flare stack. So we next slide, please. So we will update our chapter 15 with flaring emissions in this chapter. The previous chapter 2 flaring chapter, that's only for large emitter and opt-in facilities, won't be applicable to the flaring emissions for aggregator facilities. Two methods are proposed, like flaring method 1, we propose to use default emission factors. This can be applicable to a single flare stream with a consistent composition, but without measurement data. So we developed 3 sets of emission factors based on 3 different flaring technologies using the default Alberta gas composition. So these default emission factors can be used by facilities for their own benchmark applications in absence of historical data. So we are also in the process of determine which image factor will be used for the default benchmark development provided by us. For the this situation will be used by for the situation like the facility don't submit their own benchmark application and prefer EPA assign a default benchmark. So next slide, please. So method 2, we designed this methodology for multiple flaring gas streams. So we this like the multiple flare streams may be measured or not measured. So we require the total volumes of all the flare gas streams should align with the reported flare volume in Patronex. So if the flare streams were measured, we recommend the facility use the measured data. If the flare streams are not measured, so we provide some flexibility for estimate flaring streams volumes and compositions. So the mass balance or engineering estimates or manufacturer specifications can be used for estimate. And also we the facility can also estimate the flaring volumes if like the flaring streams from venting emissions. So the venting source tied into the flaring stack can use this method to estimate how much flaring volumes to the flare stack. So in Chapter 4 of Alberta quantification methodology, we provide more than 20 different types of venting emission source. So the facility encouraged to review that chapters to see if your flaring streams are covered by Chapter 4. So if you have some controls between venting emission source and the flare stacks, so Chapter 4 also provides control factors. So you can estimate your venting volumes, multiply your control factors to get the flaring stream volumes. So draft Chapter 15 will be posted for stakeholder feedback in June. So your comments and the feedbacks will be incorporated in our final Chapter 15 to use for benchmark development and the next year's compliance report. So these slides show our contact information. Feel free to contact us if you have any questions regarding 2022 compliance report or like draft flaring methodology. We are happy to discuss with you for any issues you have. Thank you.
Thanks, Brianna. So now we'll look to answer any more questions people have until half past the hour, if people have more questions. Okay, so let's start with this one, and maybe Rihanna, if you want to jump in on this one, that'd be fine. So for flaring method 2, what flare gas composition should be used? So I think in method 2, we're talking about measured compositions, but did you want to expand on that a little bit, Rihanna?
Method 2 also can be used to estimate the composition. I think if they have the mass balance, they can use mass balance method to estimate their composition too.
Great, thank you. And again, more details will come along with our publication of the draft updated Chapter 15 that will include the flaring quantification. So I don't know if you want to roll back a couple of your slides for this next one. The question is how companies are supposed to re-benchmark now that TIER is including flaring in 2023. So I think we had a slide that showed the new benchmarking equation, maybe. Or maybe I'm remembering a different version of the deck. Yeah, that looks maybe right. So I guess this this slide 32 kind of lays out the I guess the old and the new benchmark equation for the facilities. So the intention is for the new benchmark to include the historic levels of flaring emissions from the benchmark periods that you've indicated that you'd like to use for the aggregate. So that's the same benchmark period for both stationary fuel combustion as well as flaring. And then that historic level of flaring would get built into the facility-specific benchmark, I guess less the reduction target that's assigned to the flaring emissions. So hopefully that helps. I think this is also in our published benchmarking guidance as part of the that part of the that equation, and some of that surrounding text I think is in our benchmark standard. Okay, so a good question here. Is June not a late timeline for flare feedback as the deadline for the benchmark is September? Will the rules actually be in place in time for us to properly do benchmark, or will the deadline be extended? So we don't have an ability to change the September deadline in terms of that being in the regulation. We do have ongoing ability to set benchmarks, and I think we would be happy to receive flaring data even after September to inform the ability that we do have to set benchmarks. So I think we will have an ability to receive flaring data after September to help inform the 2023 benchmarks, if that is useful. Okay, so I think that maybe answers a couple other questions that are in the queue. Okay, so another question a little bit more on the compliance reporting. Where in the aggregate compliance reporting form can we add comments regarding quantifications, volumes, etc.? So that's a good question. I'm not sure we have a comment block in the form itself. Like we do have, as people know, the ability to indicate which methodologies are used for the volume and emissions calculations. So we've got drop downs for that purpose. If you need to supply, I guess, additional context for your compliance report, I guess I would suggest to also attach I guess a letter that includes that additional background information that you would like to supply along with the compliance report filing. And we'll take that as a good suggestion, I guess, when we look to update future versions of the form. We'll see if we can fit in a free-form text box for people to add comments if they have some. Okay, we've got another question on the flaring benchmark. For the flaring benchmark and the benchmark years are to align with the stationary combustion benchmark years, but we did not include flare data in those years. So that's correct. So we would be looking create an opportunity for people to do one of two things. So one pathway would be that the department will develop a default approach where we don't receive benchmark applications. The other approach would be that people will be able to submit benchmark applications in order to add the flaring data to the data that we may already have on hand for the facility. So you'd be able to submit a benchmark application that would, for those years, include both the stationary fuel combustion emissions as well as the flaring emissions. Okay, let's see here what we have for questions. Maybe this one hasn't been treated. In example 2 of the operatorship change scenario, what are the next steps and the timelines for company A and B in terms of notifying AEPA and ECCC of the operatorship change? So basically, section, I think 25 of the tier regulation does require you to send a notification to the department as soon as possible, essentially where there's been a change in person responsible for an aggregate. I believe there's a similar notification requirement under ECCC's rules upon such a change. The timing is a little bit more critical in a sense for ECCC in that you will also probably want to request to them for the new company to receive a statement number so that those sites can be included under their exemption certificate. And then also under tier, most likely you'll want to reflect some of those transfers into the upcoming year's aggregates under the tier regulations. So by the November 15th deadline, you'd want to let us know of, I guess, additions to your aggregate for the coming year. And then the December 1st, you'd want to let us know about removals from your aggregate. I think we have time probably for one more question here. Maybe we'll try to take this one. What about changes within a specific battery code? If AEP says they will adjust the FSB based on new/changing populations, but it does not seem to account for changes at a specific battery code, or when new wells are brought on to a SWB, then flowed into an MWB later, or when we buy an SWB and flow line it into our MWB, it seems strange to have to account for how another operator operated a facility years ago when we were taking over ownership now, and when the operations within the facility could have changed significantly, even though it's the same battery code. So again, what we're doing with the FSB adjustments is that we're essentially looking to avoid compliance outcomes that are based on the changes to the aggregate population. So we're saying, okay, your new aggregate has this composition. What was its performance in the historic operating period that we're using to base the facility-specific benchmark on, and basically then doing that comparison over time. I mean, you're absolutely right. In some cases, that might mean that the FSB performance is based on how things were done under a previous operator. Hopefully, in general, that means that as the new operator, you're able to do things better, and you see the benefit of those operational changes. Perhaps in some cases that isn't the case, and in fact, what you'll see is an increase in stringency from the operational differences. But that's the intention there. But as you say, we're not necessarily picking up changes in individual wells because we're again trying to operate above that level of granularity. Okay, seeing that we're at time, would like to thank you all very much for your participation today, and thanks again to the presenters on our team and the folks that were preparing materials for today. If your question didn't get answered, please feel free to send it off to our aep.ghg@gov.ab.ca mailbox. Have a great day. Take care.
Thanks.